And now, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. He's a successful entrepreneur, published author, top listing agent, a real estate and finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
Yes, here we are again another day, committed to being your consumer advocate, helping you understand your buying decisions, making you more street smart here on the Consumer Quarterback Show. We'd love to help you win. Save our hotline number. We appreciate all that reach out and contact us and support our show partners. 813-917-1894. Just call or text the hotline. 813-917-1894.
You used to call me on my cell phone.
We love it when the hotline rings, and it means that we're helping people. We always want to put you in touch with the best expert contributors here in Tampa Bay, and we've got some great ones on the show today. You're going to hear from Dan Fica from the AC Guy of Tampa Bay, our contractor expert contributor for today's show. Michael Watkins as well, principal Tampa Bay advisor, 401k revival author of his book. And we've got Justin Kelly in studio here, president, CEO, CPF Mortgage, cpfloans.com as well. So we're going to talk about what's happening in the real estate market, the mortgage market, and Costco exits the mortgage industry. Some interesting stuff there as well. And I want to thank Veteran Gutters for our segment sponsor, United States American Veteran. It's American-made products, Veteran Gutters. Brandon Porter and his team do a great job for all veterans gutters provider here in Tampa Bay. His whole team is veterans. United States of America, best country on the planet. Veteran Gutters, Brandon Porter. Let him know the real estate quarterback sent you. Take them up on those special offers. And we like to feature our real estate listings live on air. So if you're thinking about listing your property, you should talk to us and kind of get our rundown of everything that we do marketing-wise to help you sell faster for more money. Hot property listing here, 700 North Osceola in Clearwater. This is a waterfront beauty, 2 bedrooms, 2 bath. You're overlooking the intercoastal waterways, and you have a view of the bridge from the south view there. $650,000 ask price. Unit number 405 at 700 North Osceola. Gorgeous condo, updated to the max. You've got the Uba Tuba in the bathrooms and the kitchens. That's your granite. You got the beautiful flooring, marble flooring throughout. Great opportunity. Saltwater pool, gym, private boat dock, barbecue grill area. Just a great opportunity to own real estate. 1,600 square feet, 2 bedroom, 2 bath. And you can see all of our listings at platinummvpteam.kw.com.
This is God's country.
All right, we got Justin Kelly in the house, President, CEO, CPF Mortgage. Welcome back, sir.
Thank you very much. Glad to be here.
Yeah, man, my pleasure. And yeah, so turbulent times, things happening out there, geopolitical stuff. Who knows? Maybe World War III across the seas. But what do we do about it, right? What can we do about it right here in Tampa Bay, helping people save money when it comes to mortgages and in real estate, smart decisions in real estate.
Absolutely, yeah. I always say we can only control what we can control, right?
That's right.
Everything else is what it is.
That's right. Focus on what you can control, the power of focus. Where your energy goes, your energy flows, or your focus goes, your energy flows, that is. But yeah, so let's talk about some of the misconceptions people have, though. So the Fed raised the rates. What happened? It's the overnight lending rate, right? So people have this misconception that overnight, all these mortgage companies have to raise their rates by that amount. Right. But it's really much more detailed than that.
It is. So, we've heard from the Fed for a good minute that, hey, listen, we're going to be raising the Fed funds rate, which is a short-term overnight rate for interbanking lending. And it does affect, things like car loans, credit cards, boat loans, consumer loans in that respect, but not necessarily mortgage loans right away. They're correlated, but it's not directly correlated. So the turmoil that we've really been seeing in the mortgage market is related to something completely different. The Fed over the last decade has been one of the largest purchasers of mortgage-backed securities or mortgage bonds. A lot of people don't know that. And, they've clearly postured and communicated that not only are we going to stop buying these mortgage-backed securities, but we have a large balance sheet full of them, and we're going to start selling those as well into the market. And that's really what started this increase in the mortgage rates because, the secondary market and the bond holders, we don't know exactly what's going to happen. And so you can only go based off the communication you have from the Fed. They say they're not buying mortgage bonds anymore, so there goes demand. They say they're going to sell into the market, so supply is going way up. Therefore, you have to attract investors to purchase these mortgage-backed securities or mortgage bonds, and so you have to raise interest rates in order to attract, investors.
Right. Yeah, so that's a great breakdown because traditionally you would hear back in the day, especially it would be more of the Chinese buyers, overseas buyers, that mortgage-backed securities packaged and sold on the secondary market, primarily going to Asia, at least the way I understood it.
Absolutely, and it still is. Don't get me wrong. I mean, Japan is one of the biggest purchasers, or has been one of the biggest purchasers in recent years. The Fed was also one of the largest purchasers of those mortgage-backed securities. So anytime you have, somebody that's pulling out of the market or withdrawing, like the Fed is, and not purchasing those securities anymore, they got to replace that somewhere. Demand has to come from somewhere.
Right. So to couple that with rents rising, I got a clip here from the Charlie Kirk show I'm going to play. But couple interest rates rising on purchases, refinances market is drying up, and then I've got a clip I'm going to play right here.
So Phoenix, for example, for the last 30, the average prior rent used to be $1,325 a month for his, and he owns apartment buildings all over Phoenix. Now it's $1,693 a month. That means that rent has gone up 27.8% on average in Phoenix in his last 30 move-ins. Austin, 23%. San Antonio, 21%. Dallas-Fort Worth, 18%. North Carolina, 16%. Houston, 15%. The real inflation rate, I said this the other day, and someone laughed at me. But when they laugh at us, that's how you know we're probably right. I said the real inflation rate is 35%. I said it's right near there. For working people, that's about where it is. If you count gas, you count food, you count travel, you count all that other stuff. So Andrew and I were talking in the break. He says,
So when you think about that, so rents are sticky, meaning when they go up, they stay up, right?
Yep.
And I can't tell you how many times I talk to a seller that's saying, hey, I'm going to capitalize. We know the market's hot. I'm going to sell now. And they say, well, I've got my tenant at a lower rent. I haven't raised the rent on them yet. But an investor may want to buy it, and then they will probably raise the rents. Sometimes on a small townhome from $800 up to $1,200, $1,300, $1,400. So you got rents rising, challenging times for both renters and then people that are looking to relocate.
We're seeing this, across the board here in Florida. Rents have increased, I think, significantly across the country, but specifically in Florida and in the Tampa Bay area.
Right.
So as we kind of look at that and we're talking with people, current renters, and we're analyzing and looking at, hey, you're paying, X amount of dollars for rent. Even though we've seen some increases in the mortgage rates, as you look at it and you start comparing what it costs to own a home as opposed to rent a home, it still makes all the sense in the world to potentially look at purchasing a home.
Absolutely. Yeah, you got to look at buying, getting into home ownership, take advantage of the appreciation on your own balance sheet, right? Otherwise, the landlord's going to get that appreciation. You have so many different reasons why: tax incentives, just the pride of ownership. Think about that pride of ownership thing, knowing that when you paint that wall or you add that fence or that landscaping, that's yours. That's an improvement to your home. There's a thing also in politics you hear called the tragedy of the commons, right? You see that in big cities, inner cities. Oh, it's not mine. It's not my backyard. This is just an apartment complex. And then, so that pride of ownership is there. As well when you own the property. So this is where we talk about our rent versus own analysis. Can you break that down? And we'll send an offer out there to the listeners if they want to take us up on it, to our audience. But a rent versus own analysis, can you break that down, what that actually means and what that looks like?
Yeah, absolutely. So basically what we do is we take the amount that you're paying in rent monthly, and then we're going to look at potential rent increases over the next 5 years. At the same point in time, we're going to look at today's cost to purchase a home, and we're going to calculate in over the next 5 years how much equity you're going to build in there by making payments and paying your loan down, as well as equity appreciation, meaning the price just continuing to go up. And I say this, look at people who have bought in the last 3 years. They've had such a huge equity appreciation, just right time to buy, right? In the last 36 months, they got in, and many have seen six-figure increases in the equity in their home.
Right. Yeah, absolutely. You got that increase that the folks would be missing out if they're just renting, if they're looking at the renting situation. Plus, you can't throw the cool parties. You might get evicted, right?
Yeah, that's correct. Yeah, that's correct. And it's always cool to say you have an asset, right? You own an asset.
Exactly.
And,
absolutely.
It goes to work for you over the years.
Build wealth.
Yep.
That's how a lot of multi-millionaires have built their wealth, through real estate acquisition and buy and hold strategies. Look at Grant Cardone down in Miami, Cardone Capital. I mean, they're doing a lot of apartment complexes. he's using other people's money as well. These accredited investors, and I think he takes like a 35% management fee on that too. But that, hey, that's his business. But hey, for the listeners out there, for our audience, we'd love to offer a rent versus own analysis, and that's what makes our show a little bit different from most of the other shows out there. Is we have these, call to actions. For example, if you want to know the value of your property, we can do a CMA for you. You can text value. If you want to know rent-wise, what Justin was just saying, if you are renting and you're paying $1,500 a month, $2,500, $3,500 a month, what does that mean in an actual ownership scenario? So rent versus own analysis. So go ahead and pull out your smartphone, shoot us a text message to 813-917-1894. Just call or text that line. It's an off-air number. Text the word rent and the amount of rent that you're paying to 813-917-1894, and we'll put you in touch with Justin and his team. We'll do a rent versus own analysis for you, breakdown. You'll see it on plain and simple on paper on a spreadsheet. It's going to say, hey, rent over here, ownership over here, equity over here, non-equity, non-growth, etc. So just give us a call or a text. By the way, if you wanted to know what the value is of your home, just text the word value, and we'll do that for you too. 813-917-1894. Justin Kelly in the house, President and CEO, CPF Mortgage, local lender, support the local economy. And this is where I kind of talk about also, a lot of these banks nowadays, they're gone woke, man. A lot of these banks are just doing things. They're not supporting values that most of us believe, around this radio station and our listenership, not to go too down a bunny trail there, but talk about your company and your values and what you do. You're supporting the local economy here by supporting the radio show and supporting Justin Kelly and his team.
Yeah, no, absolutely. Listen, we're an independent mortgage broker and, correspondent mortgage lender. And, we have a set of pillars that each employee, swears by. And, as they come on and as we continue to, serve our community, our goal is to always let those pillars shine through and our values shine through. It's important, right? Customer first, everything else follows.
Yeah, absolutely, man. No matter what business you're in the people business, right? So when I'm having my listing appointments, that's what I talk about. It's just really making sure our customers feel like they're in touch. They know what's going on through the transaction. Communication being such a huge part, especially in real estate, mortgage, title. There's so much confusion, and then when something does go wrong, it's something that maybe we could jump on right away and make sure that the communication is there, because there's going to be liens that we didn't see, or there's going to be debt ratios or whatever type of issues. But I think as long as we communicate that with people and are upfront and honest about it, then that's the best way.
I couldn't agree with you more. On the lending side, mitigating risk is the most important thing for a buyer. And when you're going to get a mortgage loan, most people don't know. They don't understand, right? Like, hey, what am I supposed to do first? And is the company that I'm with or that I'm getting a mortgage through doing things the right way?
Right.
And so it's important, we set up a complete upfront validation team where we're giving people certainty in the transaction. We're reviewing all their tax returns, their pay stubs, their bank statements. We're making sure that if there's any red flags or speed bumps, we're going to identify that stuff up front, and we're going to fix it prior to them going out and putting a contract on a home.
Yeah, absolutely. Stop by cpfloans.com. Justin Kelly, cpfloans.com, friend of the program here. Costco exits the mortgage industry. Tell me about that one.
Go to Costco, get 2 gallons of mayonnaise, a gallon of pickles, 47 hot dogs, and apparently throw your mortgage in the basket too.
Yeah.
I guess it's not really surprising that they exited. Listen, a mortgage is a really complicated transaction. It requires a dedicated individual and a company that's focused. And so I always tell people, listen, if you're going to go get a mortgage, go to an independent mortgage broker or independent mortgage company and make sure that that's all they do is mortgage loans. There's no other additional products that they're trying to sell or that they're tied in with. You want somebody that is an expert at doing mortgage loans when it comes time to buy a home.
And that's another thing that we could pick on the big banks with. I don't have to say their names. You know who they are. They took the bailout money. They took that money and they went and bought the best corner lot location, corner building location with the highest amount of traffic count with our taxpayer dollars. But that's a good point too, is that they're doing auto loans, all types of retirement type programs. They've got probably a salary or hourly type worker there that's not tied into the transaction as much as a mortgage loan officer would be at your organization.
Yeah, I agree with that. I mean, like you said, they're selling many different products, trying to get, deposits, CDs, insurance, auto loans. It's like jack of all, master of none.
Yeah.
So, when you need a heart surgeon, you want to go. When you need heart surgery, you want to go to a heart surgeon, right?
Exactly.
So, same thing when it comes to mortgages. You want to go to somebody who specializes in mortgage loans, make sure it's being done right, and make sure everything's proper up front.
Yeah, and it's to that note too. You don't care with a pilot, for example, United Airlines. They're starting to hire based on color of skin versus the skill set of the person. In other words, things that can't be changed versus a competency. And I know a lot of the banks do that too. I mean, I don't care if I'm going to get a heart surgery. I want the best heart surgeon. I don't care if they met their quota for African American, whatever it is.
Yeah.
So that's the problem you see with a lot of the big banks too, is they're going down that woke road.
Yeah, absolutely. I mean, I think maybe some of it is certain pressures that they have at being a publicly traded company.
Right.
I can't speak to that, but the quality of your work should speak for itself, and that's what the merit of everything should be based off of.
Everything does, especially on your sites. I've seen a lot of great feedback from your customers, your testimonials, great feedback on there. CPFloans.com. Justin Kelly, he's the president and CEO of CPF Mortgage. Final thoughts, and how would you like people to engage with you?
Yeah, absolutely. So really super easy to get in touch with us. You can call us directly at 727-226-1040 or go online at cpfloans.com. And I always say, if you're getting a mortgage, make sure you're working with an independent mortgage broker or independent mortgage company. It's important.
Yeah, that's right. And check them out online. Check out the reviews. Look at the the testimonials online, and that's an important part of it. Making sure that you're working. And again, support the local economy here. Support the local small independent companies here. We're mid-sized company, real estate company with Keller Williams, and same thing here. Small to mid-sized company supporting that middle income. That it's really, I feel like the middle class is under attack now. So you got to really try to do what you can to support the good guys here in Tampa Bay. So thank you, Justin. Appreciate you coming in.
Absolutely. Thank you for having me.
My pleasure. All right, taking a quick break there. When we come back.